or good morning or good evening, wherever you're joining us from. It's Tony Consul here in Geneva, Head of Communications with IATA. I'm joined by our Chief Economist, Brian Pearce, and our Director General and Chief Executive Officer, Alexandre Juniac. Thank you all for joining us again for this weekly update on industry issues and the COVID-19 crisis. This week, we're going to be looking at the industry's cash burn. Brian has some new research on that, which he will present. Following that, Alexandre will have a few brief remarks, and then, as normal, we'll throw it open to questions using the chat function. So with that, Brian, do you want to take us through the first part?
Okay, thank you, Tony. As was said, the topic this week is the rate at which airlines are burning through cash, the rate at which they're running down their cash balances. If we first look at what financial markets think, by looking at the share prices of airlines, the blue line, and the whole equity market measured by the FTSE All World Shares, which is the red line, you can see the difference in the view of financial markets for prospects for the non-air transport economy, the rest of the world, which is actually rather positive. Share prices globally are back above where they were before the crisis. Huge contrast with expectations for airlines, where share prices have barely moved from the lows they reached in April and are still roughly 40% lower than where they were before the crisis. And that's despite governments recognizing that air transport is a critical strategic sector for the economy, particularly for the economic recovery, and have provided substantial aid. We think that totals around about a bit more than $160 billion. And that has been life support for the world's airlines. We've only seen 30 or 40 airlines either fail or go into bankruptcy, restructuring. But an issue now is that aid, particularly the wage subsidies, is starting to be withdrawn. And if we look at the expected end dates for those wage subsidy programs, and we've counted a total of 36 programs, a significant number are supposed to be coming to an end. And obviously that makes sense when we look at the broader economy, which is recovering strongly. Air travel and air transport in the airline industry is certainly not strong enough at the moment. And we're encouraged that some governments are extending the wage subsidy support, governments like Canada, Germany, Singapore, and the UK. But what we are looking at here is the extent to which we would expect airlines to continue to burn through cash, to lower the cash balances, and therefore get into financial trouble over the next 6 to 12 months. And recall that last week we announced a reduction in our forecast for air travel. We now think that air travel, having been at 75% down on last year in August, will only recover to minus 68% down by December. And actually passenger revenues are likely to be worse than that because fares and yields are quite a bit lower than last year. Passenger revenues might be something like 75% down by the end of the year. And if we look at what airlines have been doing with their fleet, which is one of their major costs, the in-service fleet is only 23% down, despite the fact that air travel in August was 75% down. And that's because most of the travel taking place today is short haul, which requires obviously a lot more aircraft to serve the same passenger kilometres. This also means, of course, that it's difficult for airlines to cut their fleet costs proportionately to the fall in revenues. And if we look at what happened to costs and revenues across the industry in the second quarter, and this shows reported data by airlines in the second quarter of this year, we can see that total revenues were around about 80% down on last year, and that was even after the support given by the cargo business, where actually revenues are increasing. Unfortunately, that's too small to stop a very sharp fall in revenues, an 80% fall. Unfortunately, airlines have been unable to shrink their cost base to match that reduced revenue base. Costs were only able to be reduced just over 50% year on year in the second quarter. Now, costs like fuel have been able to be cut proportionately, but other costs like maintenance costs or labour costs are much more difficult to reduce. And this is why airlines are still burning through cash. They're still making significant losses. This led us to re-estimate what we thought was happening to cash burn in the second quarter of this year. We think the second quarter was probably going to be the worst quarter for the industry. That was certainly the low point for air travel. And you can see here how we've built up our estimate from lower revenues and looking at the reduction in costs that have been possible in order to get an estimate of cash burn. We think that the industry was burning through cash at a rate of just over $50 billion during the second quarter. That's around about $17 billion a month that they're running down their balances of cash. What we've done here is also to look ahead to the second half of this year. We know that revenues are going to be weak because of the continued travel restrictions and the impact of second waves of COVID. We looked at that earlier. There are also challenges in reducing costs sufficiently. And while the situation is certainly expected to get better than the second quarter, we still think we're going to see the industry burning through cash for a total of just under $80 billion, $77 billion during the second half of this year. That's an average of $13 billion a month. That's down from the $17 billion a month in the second quarter. But that's running down the balances of cash and liquid assets that airlines have to survive the continued tough situation. We know the extent of cash balances and liquid assets that airlines had in June because that was announced in financial results. So what we've done is we've taken this expected rate of cash burn of $13 billion a month in the second half of the year and looked at how long we would expect those cash balances that we know airlines had in June, how long they would last. And clearly there's a wide spread. There are a number of airlines that have, as well as received cash aid from governments, have also raised substantial capital from capital markets through issuing debt or equity. But there's a long tail of airlines that haven't been in a position to do that. And you can see here that the median airline, the average airline, has roughly 8.5 months of cash left at the rate of cash burn that we expect to see in the second half of this year. And if we look at what we would expect to happen through the early part of next year, we still think the industry is going to be in really quite difficult business conditions, improving, but we would expect still to see the industry burning through those cash balances. And clearly, going through 2021 is a longer period than the 8.5 months that we estimated in the previous slide. So we're facing, we think, some tough winter months for airlines when cash flows are always seasonally week. And I think, we're looking for airlines getting into trouble, if not failing, without either further government support or without airlines being able to access capital markets for more cash. Thank you.
Great. Thank you very much, Brian. And I'll turn over to Alexandre to give us a few sort of overall remarks before we throw it open to questions.
Yes. Thank you, Tony. Thank you, Brian. Thank you, all of you, for joining us today. Unfortunately, it's another week with little improvement in the aviation industry's position amid the COVID-19 crisis. Brian's presentation highlighted that airlines continue to burn through cash. For the second half of the year, we expect, on average, for airlines to burn through cash at about $300,000 per minute, for a total of $77 billion. And that's on top of the $51 billion cash burn in the second quarter. We are burning through cash because we cannot cut costs fast enough to make up for the impact of not being able to do business. Borders, for the most part, remain closed. We believe that there is a solution. As we have spoken about in these briefings for the past few weeks, we continue to push for systematic testing on COVID-19 prior to departure. We believe that should give governments the confidence to reopen borders. We are advocating for that with governments, the health authorities, WHO, and through ICAO. In the meantime, however, the crisis is growing longer and deeper than anybody could have imagined. The months ahead are traditionally the weakest for airlines. Normally, they survive on the cash cushion from the busy peak travel period in July and August. We did not get that boost this year. Airlines did receive $160 billion in support from governments. That was a lifeline. We would have seen many more bankruptcies and job losses without it. Now, most of those programs are ending. So it's time to ask governments to take extra measures to replace and extend them into the longer term. The potential for failures and job losses in the coming months is enormous. Today, I want to emphasize that this is not just an airline problem. We know that our airport and air navigation services partners are also struggling. They suffer from the same lack of demand that airlines do. And increasing their unit charges, passing the cost to other parts of the value chain to cover the gap, is not an option. Remember, at the end of the value chain are consumers, and they are price sensitive. Already 2/3 of travelers say that they will postpone travel until their personal financial situation stabilizes. Anything that makes travel more expensive in this environment will only delay the recovery and put jobs at risk. Last week, ATAG announced the scale of jobs at risk. Some 46 million jobs are in peril because people are not traveling. About 10%, 4.8 million of those are in the aviation industry. The rest are spread across jobs dependent upon global connectivity that only aviation can provide. My point today is that the enormity of what is happening to aviation has consequences far beyond the industry itself. And the means for financial sustainability in this long and deep crisis is far beyond what the industry is capable of ensuring by itself. Governments must be actively involved in supporting the entire sector's finances through this unimaginably difficult time. And they should do it knowing that 10% of global economic activity is related to travel and tourism. That depends on connectivity. So supporting the industry in these challenging times is an investment worth making. Only a financially viable industry will be able to accelerate a broad economic recovery when borders reopen. And as I see it today, the sector will not be ready to do that without government support. Thank you for your attention, and we look forward to your questions.
Okay, thank you very much, Alexandre. And Brian, we have quite a few questions in the queue, so we'll go through them one at a time. The first one is a question about labor costs. And the questioner asks, is it fair to say that labor is a non-reducible cost? And we've seen lots of furloughs. The further question is, but will more have to be made if demand is lower than previously thought?
I mean, many of the jobs in the airline sector are highly skilled. So airlines are very reluctant to lose those skills. But I think the difference with this crisis is that we're facing quite an extended period of weakness in demand. And so, airlines are now starting to have to resize their businesses to fit that much smaller expected revenue stream and business size. So I think that we're going to, as we heard from those ATAC numbers last week, we're expecting to see job losses as a result of this.
Okay, thanks, Brian. A couple of questions characterizing the cash burn. So the first is there any differentiation in geographies? Some areas burning more quickly than others?
A little bit, yes. I mean, we're seeing a recovery in China. The Chinese domestic market is almost back to where it was before the crisis. And for the Chinese airlines, that constitutes a major portion of their revenue. So they are in a much better shape. But for the majority of the rest of the world, particularly airlines dependent on international markets, there's very little difference. The only bright spot has been cargo. Cargo airlines and airlines with substantial cargo revenues are also in a better position because cargo revenues have risen. But no, I think passenger airlines regionally are all suffering to a very large extent in terms of their cash burn. There's a lot of differentiation in the ability of airlines to raise cash from the markets. We've also seen some differences in the support from governments. Some regions, like the Latin American region, for example, has not really seen much support, if any, from governments. So that's left airlines in rather different financial circumstances, and the bankruptcies that we've seen, or airlines that are in bankruptcy protection, have been largely in those regions where we haven't seen the government aid.
Okay. And the second sort of question in that line of thought is, has there been any difference between full service, ultra low cost, and low cost in their ability to either cut costs or contain their cash burn?
To some extent, yes. So those airlines relying on business passengers to sustain the viability of their services, or those airlines relying on a lot of connecting passengers to sustain their services, have found the restart much more difficult because of the travel restrictions that are still in place for the majority of international markets, and also because there's very little business travel at the moment. So point-to-point services are at the moment more suited to this very difficult business environment. So some of the low-cost airlines have been doing better than some of the network airlines because of this.
Okay. We have a question about Argentina. The industry there remains largely shut down, as it has since mid-March. What is IATA doing to try and reopen that market? Do we have any advice as to how to get around the overall shutdown there?
We have no particular advices. We are lobbying the Argentinian government to reopen the borders, to restart. the industry, following, the various guidelines and international recommendation that we have put together within ICAO, or to take the example of other Latin American states that have restarted their air traffic, such as Colombia, Chile, Brazil.
And I suppose our promotion of testing as a way to reopen borders and restart the industry would be equally applied there?
For sure. Our proposal to have a systematic testing prior departure should be applicable everywhere.
Okay. We have a question about Europe. And the questioner says, what will the influence of the current situation have on the potential for further consolidation in the European market? Alexandre, did you want to take that, or Brian?
We know that in the middle of September we saw a setback in the intra-European market. We had been seeing that as the one area of international air travel that was recovering fairly strongly as a result of the bubble, the travel corridors that had been set up within Europe. But the resurgence of COVID-19 knocked that back. We saw renewed travel restrictions. So the European airlines anyway were facing quite a difficult situation. A large proportion of passenger revenues comes from markets of a longer sector length than the ones that were open within Europe. So, the travel bubble was not a solution that would have restored the airlines in Europe to positive cash flows. So European airlines are in trouble. There are a lot of smaller airlines in Europe, and I think they face quite a difficult winter period.
Okay. We have a question about testing. IATA has been talking about testing recently. The Lufthansa CEO at the Aviation Festival also talked about testing as a potential breakthrough to reopening the industry. Alexandre, are you still optimistic that that's going to happen?
Yes, we are. We are more and more optimistic because we see more and more government starting to pay interest to that, to ask questions, to put together some testing programs or corridors or bubbles in which the systematic testing would be included. So yes, we are pretty optimistic. It will take time, but we think it will work. It is the only viable solution to remove the travel restrictions and particularly quarantine, and to remove it safely.
Okay. Maybe as a follow-up to that, we have a question that asks about how we build that into a global standard. So the questioner says, are you concerned about the fact that you've got these disparate programs starting in different parts of the world?
We are concerned to see so many differences and non-consistent patchwork of measures, because it's very, very difficult to manage, either for the airlines or for the passengers, to be able to know in advance what they will be obliged to do. First of all, what the positive side is that we see these different experiments as measures taken by airlines or by country to restart. So it is something that goes in the right direction. What we do, to ensure that there is consistency, homogeneity, that it is applicable equally all over the world, is that we work within ICAO with the governments to establish common guidelines that would be applicable everywhere.
Okay. Brian, we have a question for you. You mentioned that we could face some potential bankruptcies in airlines going forward. The questioner is asking what might characterize airlines that are more vulnerable. Is it a question of leverage or reliance on a certain business model or a certain market exposure?
I think it's all about cash at the moment, and whether airlines have got enough to offset the rate at which they're burning through that cash. I think the industry faces the prospect of airline failures in the months ahead, unless the situation changes. Unless we can get stronger revenue growth through getting travel moving again, or whether airlines can raise more cash through either the capital markets or governments, or government's aid. And the airlines that are vulnerable at the moment are the ones in that chart I showed earlier to the right-hand side that have not got many months' worth of cash left in the bank.
Okay. We have a question on that, the number of months with cash in the bank. The questioner asks, is that starting 8.5 months from today? Is that from a certain period of time?
So we looked at the amount of cash and other sort of liquid assets that could easily be turned into cash that were declared by airlines in their public accounts as of the end of June. And then we looked at the average rate of cash burn in the third and the fourth quarter, the second half of this year, and how long that would last. So that's really starting from July. So the average airline or the median airline lasting 8.5 months would take us to the end of the first quarter of next year.
Okay. So in line with that questioning, how critical is it that governments come up with cash quickly to support the industry?
Pretty critical. Otherwise the industry will run out of cash. And so you will see more and more bankruptcies. So we are asking government to extend their program or to renew their program or to confirm the financial support to the industry. It's critical and urgent, as it was in the second quarter at the beginning of the crisis.
Okay. And I guess the second part to that would be, are you optimistic that governments understand the criticality of this?
During the first period of the crisis, government have been very responsive, and they have done a pretty good job. $160 billion in terms of financial support is a big number, huh? And they have reacted pretty fast, and so we hope that they will adopt the same attitude.
Yes, I mean, we're seeing some governments extending wage subsidies, which we think is a sort of critical element of that support. But I think they're seeing non-aviation sectors recovering much more quickly. And I think the point we want to make is that air transport and travel and tourism are really at the front line of the damage from the coronavirus, and are in a particularly difficult situation.
Okay. Brian, you mentioned that it would be 2022 before the industry turned cash positive. The questioner asks, first off, what's the reason for your optimism on that? What's the basis for the calculation, and is there a best case or worst case scenario to that?
Yes, there's certainly a number of scenarios. So the basis for that calculation, which I must admit I thought was pessimistic rather than optimistic, i.e. that the industry is still burning through cash throughout next year. I mean, we're expecting to see some recovery, some reasonable recovery in traffic and revenues, probably in the second half of next year, on the basis that we have a vaccine, but that that vaccine is not completely distributed to all markets in the second half of next year, and we would expect airlines to be going through restructuring of their costs. So it's those two reasons that we think we'll see the rate of cash burn diminishing a lot more next year. But it's going to take time. It's going to take time to return to profitability and positive cash flows.
Okay. We have a question about some of the terminology you used, Brian. You said the median airline has 8.5 months. What does the median airline mean?
Okay, so there are different ways of measuring the average. So the median airline is the one in the middle of the distribution. So it's the average, the typical airline.
Okay. Another is, and I think you covered this a bit in your presentation, but what are the main areas that are eating up airlines' cash at this point?
Yes, well, I mean, one is aircraft costs because of the short-haul nature of flying. That requires a lot more aircraft. The in-service fleet is only 23% lower than it normally is compared to revenues which are probably 80% lower. Staff costs are the second biggest area as well, and despite the support from wage subsidies, that's a major cost element for airlines.
Okay. I guess as a carry-on from that, we have a question from Brazil saying that LATAM Airlines there is trying to reduce permanently the salary of pilots and flight attendants. And they're wondering, is that a trend happening around the world? And in fact, is it even possible to reduce salaries in most countries?
So I think given that, in the second quarter, we saw an 80% fall in revenues. They will be better in 2021, but not dramatically so. Airlines have got to reduce costs or they fail. And so I think that means they're going to have to reduce their salary costs in some way or another. That's either losing jobs or staff taking lower pay.
Okay. Getting back to the sort of 8.5 months of cash and which airlines will survive and which airlines might not. The questioner says, in terms of the amount of liquidity across airlines, in terms of how much cash they have to survive, can we assume that those with the longest liquidity survival ranking are those with the lowest costs?
I think for the most part, yes. That does include some full-service airlines that have got higher unit costs than low-cost airlines. But as we saw pre-crisis, we've seen some very financially successful full-service airlines as well. One thing I should say is that what we measured was the amount of cash that airlines had at the end of June. Some airlines will be able to raise more cash from the capital markets by borrowing against assets or issuing equity or more borrowing. I think the problem for the industry is that that's only a relatively small number of airlines that actually does have access to those capital markets. And it's really that long tail of airlines that doesn't that we're concerned about.
Okay. We have a question about passenger confidence. And the questioner says, there was a bad experience at the beginning of this crisis with ticket refunds. Now we're trying to get people to travel again, but there are potential for bankruptcies, and that could also impact consumer confidence. Is there something that IATA can do to help rebuild consumer confidence in such a situation? For example, an IATA cash pool to help protect consumers?
First of all, I'm not sure that that passenger confidence is heavily impacted by this question of refund. Of course, it has not been positive, but the key issue is about COVID and the potential transmission of COVID between one country to another, the potential travel restrictions that could be put in place and prevent travelers from, having a normal and safe travel. That's the key issue in terms of confidence. For IATA, to build a cash pooling to cover or to insure, passengers against the consequences of bankruptcy, it's totally out of our means, because it would be in the order of magnitude of $1 billion. It has also been excluded by many airlines to have this type of cover. That would be in favor of those who are managing things badly, and that would be supported by those who are the best in class. So there are many reasons for that not to happen, and not to be the solution to something which is not a real problem, I think.
I also think that one other factor is that the risk to consumers is arguably less, since today we're seeing most bookings of tickets taking place very close to the date of flight. So more than 40% of tickets at the moment are being bought within 3 days of travel. So obviously the bankruptcy risk is much less in those circumstances.
Okay, so Alexandre, following on that point that it's critical to get testing in order to restart the industry, the questioner asks about a previous comment you made that towards the end of October there was an ICAO milestone, which would be potentially a launching point for a common standard for testing. Are you still optimistic in something coming from ICAO by the end of the month?
It's what we have established as a target with ICAO. So we think it could be achieved. It will not be easy, because we have to convince several governments, different authorities, in addition to ministers of transport. You have to include the sanitary and health authorities. But we think it is still achievable to have something by the end of October.
Okay. So we have another question on that, asking what the timeline from that might be before we start to see this on a widespread basis as part of travel.
Or it will last weeks, even months to be deployed, because you have to buy the tests, you have to organize the testing at airports, you have to prepare all of that, and it will take weeks.
Okay. On a slightly separate issue, we seem to be indicating that this crisis is going to last for a very long period of time. And the questioner is wondering whether the current slot allocation system is up to the challenges of the next couple of years and the instability of the next couple of years. And should we be maybe looking at some either revisions or temporary changes to the way that slots are allocated?
We think that the slot system is working quite well in normal times. As we are in exceptional times, we have asked for flexibility or for waivers everywhere in the world, and frankly, governments have been pretty open, even if sometimes a bit slow, but pretty open, to grant us that waiver. That is absolutely a key for the continuity of our operations everywhere in the world, and the stability of in a world that is characterized by complete instability, risk, and shocks. Okay. So I think there is no reason to modify the slot system for the mid and long term future.
Okay. We have another question about airports and infrastructure providers. The questioner asks, should infrastructure charges be cut to help airlines? And what more could or should airports do in order to cut their costs?
I don't think it's a matter of helping airlines. I think it's a matter of helping the travelling public and the companies that are shipping goods. I mean, in any competitive market, as in the airlines market, firms will lower prices to consumers in times like this, times of crisis, in order to get business back. So that would certainly, I think, be what we would hope to see in the infrastructure sector, such as airports. Now, We know, of course, that every member of the air transport ecosystem value chain is suffering at the moment. And so airports would need support if they were to offer lower charges to airlines and to passengers. So we'd call for governments to support airports as we're calling for governments to support airlines. It's the whole transport system that needs help to preserve the connectivity that's essential for the economic recovery, to bring trade and tourism to support the jobs.
Okay. Brian, in one of your slides, you mentioned alongside the 120 billion from governments, there was 20 billion in supplier assistance.
Yes.
So the questioner asks, I suppose along the lines of that, first off, what's in that 20 billion?
Yeah.
And secondly, will airlines need to seek more rent deferrals from lessors this winter?
Yes. So in that 20 billion, there are rental deferrals from lessors. Airlines have parked a lot of fleet. They've got much less need for aircraft. The in-service fleet is down 23%. So the assistance of the lessors in the face of some of those fixed-term contracts is welcome. Also included in there are some deferrals for infrastructure fees, for example. Airspace charges in Europe have been deferred, but they've been deferred. They haven't been eliminated, so they're due to be paid sometime next year. So those costs have not completely gone away, and we're either looking for efficiencies on the side of suppliers or support from governments to stop this, meaning higher costs for travellers and for shippers.
Okay. On a similar sort of line of questioning, we have a question about owned versus leased aircraft. The assumption is that we're seeing more sale of aircraft and leasebacks. How much is that helping the industry? Do you have any quantification on that? And have we seen the balance? How have we seen the balance between owned and leased changed since the beginning of the crisis?
Yes, that's helping a lot. Obviously, for those airlines that were able to afford to own aircraft outright, which was probably only about half the industry before the crisis. But selling aircraft and leasing them back from lessors has been a very helpful source of cash for some airlines. And yes, we have seen as a result a change in the balance towards the leasing industry owning a larger proportion of the fleet in service.
Okay. At the very early stages of the crisis, IATA called for financial aid, and we were asking for something in the range of 200 billion as a quantum for what the industry would need to get through. We've seen governments come to the plate with 160 billion. What should be the potential size of any future assistance that we see necessary? Is it along the same scale or slightly less, slightly more?
What we can say perhaps is that the 200 billion was an estimate we made at the beginning of the crisis. It was around April or May, something like that. In that period, if you remember, the forecast for the traffic recovery was significantly more optimistic. We were betting on a number by the end of the year, which was around 60% of the previous figures. Now, as Brian underlined, we have significantly reduced our forecast down to 38% of 2019 figures for the end of the year. So the cash need have increased since that. So it should be above 200 billion as a whole and significantly above.
Yeah, and Ryan, you want to? We're still expecting airlines to burn through $60 or $70 billion of cash in 2021. That gives a scale for the additional need that airlines are going to have. They're going to have to raise that cash somehow, either from government aid or from accessing capital markets or selling assets.
Okay. We have a question also about economic aid packages. And it says that the IMF has indicated that the global public debt is increasing, with low-income nations at great risk. With poor nations struggling with debts, how can they be convinced to extend support to their airlines? And what type of solutions can be devised for those markets where governments can't afford to provide support?
We have already, during the first period of the crisis, asked international institutions such as the World Bank, African Development Bank, various international bodies for financial support, targeting, governments that are struggling financially in poor areas or less developed areas of the world. I think we will do the same in the future, asking the international bodies to help those who are needing money and financial support.
Okay. Yes. So, Brian, you talked about the industry becoming cash positive in 2022. The questioner asks, how do you see business travel recovering in that scenario? Do you see it returning to normal by 2022, or would it still be lagging?
It certainly doesn't look like that at the moment. We've been speaking to corporate travel buyers and others in the business travel area, and at the moment they're telling us that plans for business travel are less than 10% of normal levels. And although we've seen sales of business class seats rising at a similar rate to sales of economy seats, this is not business travel. It's because the average fare for a premium seat is now fallen to the level equivalent to what an economy seat cost before the crisis. And so I think we're seeing passengers who are visiting friends and family and on leisure sitting at the front of the cabin. Business travel has not recovered, and we think it will lag the general recovery, given what businesses are saying they are planning to do. We think in the longer term, we still think that business travel will recover to some extent, because there is a need for face-to-face meetings to transfer knowledge, to develop relationships, business relationships. So there will be a recovery, but I think it's going to be a number of years.
Okay. Another question about how airlines might be accessing capital. And the questioner asks about the sale of frequent flyer schemes to leverage access to capital. How do we see that trend going forward? Do we see more airlines doing that? And do we see any concerns about airlines taking that activity now?
I think airlines need cash. We know there's going to be a very difficult winter period ahead. And as this presentation has shown, airlines are still burning through those cash balances. They need new cash. And so they're looking for any asset that they're able to borrow against. And frequent flyer programs are, a very important asset for airlines. So I would expect to see more of this. The challenge, of course, is that it's only the airlines with well-established business travel programs that have significant programs. So that doesn't apply to many airlines.
Okay, thanks, Brian. We have just a couple of questions left in the queue. One of them asks, do we have any estimate of the impact on global GDP of the COVID crisis in the airline industry?
Yes. We saw from the figures released by ATAG last week that the sector would typically, and this would include all of the firms in the value chain, the ecosystem, would typically support something like $3.5 trillion of GDP globally. The expectation is that that has halved. But what that doesn't take into account is the service airlines provide in transporting trade and to some extent certainly the business travel. It doesn't take into account the importance of the business travel as well. But trade is missing from that estimate. So although in terms of the direct jobs supported by the industry, that's probably halved. Governments shouldn't lose sight for the fact that this industry plays a really critical role in the economic recovery because of its role in transporting trade and supporting global supply chains.
Okay, and then the last question for today, we'll return to testing. And the questioner asks, over the last week or so, have you seen any regions particularly interested in establishing testing as a means of starting up either regional travel or creating air bridges? Are there any places you're more optimistic to see testing come in earlier than others?
Yeah, we see regions pretty interested in Asia, Southeast Asia, and progressively in Europe.
Okay.
And of course, Middle East. Sorry, I should have mentioned that.
And there's actually one last question on testing, where the questioner says, is sort of 15 minutes, €7, which has been discussed in a few locations. Is 15 minutes, €7 sort of the standard we're looking at trying to establish?
It is something that would be manageable, operationally efficient, affordable. So we are in the order of magnitude of what should be acceptable from various parties of the industries, including governments, airlines, airports, passengers. Everybody should say yes, to these type of numbers.
Yeah, faster and cheaper would be better, but as a start, it's
of course, yeah, faster, cheaper, even more reliable if possible.
Yeah, but it would be the starting point for where we could see this globally. That's all the questions we have in the queue for today. So thank you, everybody, for joining.